Tensions between the United States and Iran reached a boiling point over the Strait of Hormuz, a vital artery for global oil. This narrow waterway, just 21 miles wide at its narrowest point, is responsible for the passage of nearly a third of the world's seaborne oil. Any disruption here sends shockwaves far beyond the Middle East, affecting economies and energy markets across the globe. Iran's sudden closure of the strait sent oil prices soaring and rattled economies worldwide. Within hours, the price of crude oil surged to levels not seen in years, and energy-dependent nations scrambled to secure alternative supplies. President Trump issued an ultimatum: reopen the strait or face targeted U.S. military strikes. The world's attention turned to the Persian Gulf as American warships mobilized and diplomatic channels buzzed with urgent negotiations. The world watched anxiously as the deadline approached, fearing a conflict that could cripple energy supplies. News outlets provided minute-by-minute updates, and social media erupted with speculation and concern. Financial markets plunged, investors fleeing risky assets for safer ground. Stock exchanges from New York to Tokyo saw sharp declines as uncertainty gripped traders and analysts alike. The standoff threatened not just the US and Iran but the entire global economy's stability. Multinational corporations braced for supply chain disruptions, and governments convened emergency meetings to assess the risks. Oil-dependent nations felt the squeeze immediately, with supply chains disrupted and prices spiking. Gas stations in several countries reported shortages, and consumers faced rising costs at the pump. The prospect of war in such a critical region cast a shadow over markets and economies everywhere. The uncertainty left businesses and ordinary people alike wondering how long the crisis would last, and how severe its impact might be. The stakes had never been higher, with the world's energy security hanging in the balance. As leaders weighed their options, the world held its breath, hoping for a peaceful resolution to a crisis that threatened everyone. Just as war seemed inevitable and tensions reached a boiling point, President Trump stunned the world by unexpectedly extending Iran's deadline to reopen the Strait of Hormuz. The announcement came late at night, catching both allies and adversaries off guard, and immediately dominating headlines across the globe. The new date, April 6, 2026, offered a brief but crucial window for diplomacy to work. Trump insisted the extension was made at Iran's request, emphasizing that talks were going very well and hinting at possible breakthroughs behind closed doors. The world watched closely, wondering if this was a genuine olive branch or a calculated move in a high-stakes game. Tehran, however, flatly denied any negotiations or requests for more time. Iranian officials appeared on national television, dismissing Trump's claims and accusing Washington of spreading misinformation. The conflicting stories from both capitals deepened the mystery. Was this real diplomacy unfolding, or simply political theater designed for domestic audiences? For now, the extension eased immediate fears of war and gave global markets a glimmer of hope. Investors breathed a cautious sigh of relief as oil prices stabilized and stock markets rebounded slightly. Yet, the lack of trust and transparency between Washington and Tehran left the world guessing about what might come next. The pause bought precious time, but uncertainty lingered in every corner of the globe. Was this a genuine step toward peace, or just a temporary delay before another crisis? Diplomats scrambled to interpret the signals, while businesses and ordinary people braced for whatever might follow. The world waited, caught between hope and skepticism, as the clock ticked down toward the new deadline, unsure whether history was about to change, or simply repeat itself. Trump's announcement sparked an instant rally in U.S. stock futures. Investors, relieved by the delay in military action, rushed back into the market. The S&P 500, Dow, and Nasdaq futures all pointed to a strong opening. The logic was simple: war would devastate the economy, but a pause offered hope. This was a classic relief rally, markets rebounding as immediate disaster was averted. Investors weren't convinced the crisis was over, but the threat had receded, if only briefly. Futures markets, driven by headlines and sentiment, reflected the desperate desire for stability. The rally was less about optimism and more about relief. For now, traders chose to focus on the possibility of peace. The world's financial pulse quickened, hoping the calm would last. The overnight rally followed a brutal day on Wall Street. Fears of war had triggered a sharp sell-off, pushing major indices into correction territory. The S&P 500 dropped 1.8%, the Nasdaq plunged 2.2%, and the Dow fell 1.7%. Tech stocks were hit hardest, with the Nasdaq Composite down over 12% from its peak. Investors scrambled for safety, dumping stocks amid geopolitical chaos. The sell-off reflected deep anxiety about the economic fallout of a Middle East conflict. Correction territory signaled a major shift in market sentiment. Optimism had evaporated. The stage was set for wild swings, with every headline moving billions. Markets had become hypersensitive, reacting instantly to any sign of escalation or relief. At the heart of the crisis was oil. This single commodity, so deeply woven into the fabric of modern life, became the epicenter of global anxiety almost overnight. From fueling cars and planes to powering factories and heating homes, oil is the lifeblood of the world economy. Iran's blockade of the Strait of Hormuz choked off a fifth of the world's oil supply, sending prices surging. The narrow waterway, just 21 miles wide at its tightest point, suddenly became the world's most critical bottleneck. Brent crude soared nearly 5% to $113 a barrel. U.S. crude jumped almost 6% to $100. Traders scrambled to adjust, and markets reacted with panic as uncertainty gripped the globe. These spikes hit businesses and consumers alike, fueling inflation and squeezing wallets. For families, every trip to the gas station became a reminder of the crisis. For companies, rising costs threatened profits and jobs. Higher oil prices acted like a global tax, raising costs for transportation, goods, and services. Shipping companies, airlines, and truckers all faced mounting expenses, which quickly trickled down to everyday products. The threat of U.S. strikes on Iranian energy sites risked even greater supply shocks. Military escalation could have triggered a chain reaction, disrupting not just oil, but the entire flow of trade through the region. A prolonged conflict could cripple infrastructure and send prices to catastrophic levels. The world watched nervously, knowing that a single missile could ignite a global economic firestorm. Trump's deadline extension offered a chance to unlock the supply chain and calm markets. It was a brief window of hope, a pause that allowed diplomats to seek solutions. The world hoped for a diplomatic breakthrough to reopen the strait and ease the crisis. Behind closed doors, negotiations intensified as leaders searched for common ground. Oil's volatility underscored just how fragile the global economy had become. Every headline, every rumor, sent shockwaves through financial markets and boardrooms worldwide. Every move in the Gulf rippled across the planet, reminding us that in a connected world, a crisis in one narrow strait can touch every corner of the globe. The oil shock quickly reshaped expectations for U.S. interest rates. Hopes for Fed rate cuts vanished as inflation fears took center stage. Instead, markets braced for possible rate hikes to combat surging prices. Bond yields jumped, signaling higher borrowing costs for everyone. The crisis also rattled American consumers. Confidence plunged to its lowest since late 2025. People saw rising prices at the pump and grocery store, fueling anxiety about the future. The prospect of higher rates and weaker spending threatened to slow the economy further. Inflation expectations soared, making recovery even harder. The ripple effects of the Middle East crisis were being felt in every American household. The oil price spike hit businesses hard, especially travel and leisure. Carnival Corporation slashed its profit outlook, blaming soaring fuel costs. The company's stock tumbled over 4% as investors digested the bad news. Carnival's new forecasts assumed oil prices would stay high for months. If prices stayed above $100, was nar Ubersamas buys, crores, profits could fall even further. The cruise line struggles mirrored those of airlines, truckers, and manufacturers. Rising energy costs squeezed margins or forced companies to raise prices, fueling inflation. Carnival's warning was a stark reminder: global crises have real, immediate impacts on American businesses. The pain was spreading far beyond Wall Street. Despite the deadline extension, the region remained a tinderbox. Israel launched strikes on Iranian targets, escalating the conflict and defying hopes for de-escalation. Iran accused the U.S. of complicity, further muddying diplomatic waters. Tehran warned civilians to avoid American-linked factories, hinting at possible retaliation. The threat to U.S. commercial interests added a new layer of risk. Meanwhile, U.S. officials sent mixed messages, talking ceasefire, but preparing for more action. The situation was volatile, with diplomacy and military posturing colliding. The world watched, bracing for the next move. Markets swung wildly as risk perceptions shifted overnight. Trump's deadline extension sparked hope, but the underlying crisis remained unresolved. The Strait of Hormuz was still closed, oil prices high and tensions simmering. Investors clung to any sign of de-escalation, but knew the danger hadn't passed. The new April 6th deadline became the next flashpoint. Genuine diplomatic progress could bring relief. More escalation would trigger another sell-off. Markets were caught between fear and hope, waiting for clarity from the Middle East. The coming weeks would decide the fate of the global economy.